thank you for coming, and let's see if we can do some damage with respect to trying to guess what's going on in the market. So this is the S&P, the E-minis. So think SPX for those of you watching at home. And clearly it's a 1 hour chart, so it's relatively short term. The bulls have been in charge since the 20th, if you want to take a date down here. Every dip was bought, and that's how they build on an ascending trend. So this was the Pfizer, the Pfizer spike, and it was an unbelievable spike. I think best represented by, if we take the IWM, but we'll take, okay, there we go, the futures for the small caps. From here to here, I believe is 10%. This is a basket of 2,000 stocks, almost 10% on one headline. The breakout was going to happen anyway. We had higher lows knocking on a roof, and the roof was a contention level from before. As soon as they went in, all they needed is just boink to go above it, and they were going to get their target. They got the target in 5 minutes, and then they gave it all back. So they rallied 10%, and then they fell 7%. I've never seen this before. 10% rally in a basket of 2,000 stocks, and then give back 7% right away, and then come back to it. And they're probably going to bust it this week. We don't know. But that becomes now, look, higher lows. So what I'm saying is that if we ignore the news, you could have traded the breakout by being ready for a breakout, not necessarily 10%. So now what's going on is we have the same setup here. So Monday, Tuesday, the bears are against the ropes. The prices are going to come to a point, and there will probably be a headline that'll do this or that. But that's going to happen anyway. We have higher lows, flat top, and we have unresolved issues up here. So if I were a guessing guy, I would guess up here before down here. But if you do this, you buy the dip, because it's probably going to repeat. It repeats because the bulls are in charge. This is a 1 hour chart. We'll zoom out to 2 hours. Let me zoom out to a day. So these are the small caps after March. By the way, the small caps hadn't made a new all-time high since 2018. This was the high. And same with the Dow. The Dow, I think, had one, but it was also lagging, and now it's alive again. All right, so we have every dip they bought. So why this next one? Why should it be different? It's reverting to the mean. Remember, the red blue is just mathematical mean. Like when somebody say reverting to the mean, they want to come. Everything wants to come back in the middle. So every dip, buy it. So next time we dip, don't expect a chasm like they would have you believe on CNBC. I watched Friday Carter Worth. He works on the same concepts. He presents good arguments, but he uses them for both bulls and bears. Depends on his mood. Like he showed, I forget what the chart was, a trend and a break in trend. And he would say something like the presumption is going to continue on lower. But then on the same time, other times he'll say there's support that they bounced before, and this time he doesn't say it. He just says it's going lower because they broke trend. I trust support before trend breaks. So if I see a breach here, I don't assume here. I assume this is going to hold and see what happens. So they probably do this kind of a deal. So this is a trader's mentality versus somebody trying to forecast future prices. I'd like to go line to line. The bulls won. They are the champs. Beat the champs before you talk about lower prices. Exactly the same concept here. And this whole thing is the value area. So from March until now, this rectangle I just drew is the playground. Anything outside of the playground is unusual based on history, based on this price action. So why should it be different without different circumstances? So if the virus mutates and we're starting a whole new stint of research from scratch, maybe. But with the knowns we have, even with the uncertainty in the election, is he going to be? Is he not going to be? Is there going to be lawsuits? Is it going to drag for months? Doesn't matter. This is where they want to be. So I assume this is where they will stay until new stuff comes up. Okay, so this is kind of like a discussion for everything from the small caps perspective. This is the Dow. Notice I haven't shared any of my lines. So look at this. That's the crash scene from February. We just poked above it. Same spike with Pfizer. That was an amazing headline. I want to see. I'm curious. Okay. This is a weekly chart to see long term. So this is 2018, and they finally broke through it, and by a whole lot immediately. Candles like this are not good for the bulls. They kind of ruin things. But they also not good for the bears, because spikes like these almost kind of tell you where they want to go. Look at this one right here. Albeit, oh, remember Tesla? The one spike to 1,000 or whatever it was before the split? It was like they were never going to get back there. They did. Let's see. Tilray is another one that was fantastic. But Tilray, look, that was incredible. And now it's... Phew. Okay, so this is not Tilray clearly, but I think the opportunity is in this guy, the NASDAQ. Now everybody, they look at this chart and they start pontificating that money is going to flow out of this and pour into the other ones. I say if money is going to flow out of this on a consistent basis, all of them are going to be falling. There's no way this is going to be falling while the other ones are not. So yeah, I'll note those. In fact, let's do that right now. I'll pause the recording. All right, somebody requested we look at the Dow Monthly. What about it?
Is it okay if I speak? Can you hear me?
Yeah. What about it? Go ahead.
So the Dow Monthly, is this the monthly chart?
Yes.
Any concern about a potential megaphone there from 2017 till now? If you look at the lower lows and the higher highs?
You mean expanding range?
Right.
Like this?
No, so if you connect the lower lows to the
Oh, this
red,
one.
yeah, there we go, the megaphone.
You know what? These go either way. And in this case, I couldn't tell you if. Oh, so you mean they want to trade the range below?
Right. So
Yeah.
maybe should we get
Yeah.
defensive?
Well, haven't I said that? I think I've said that if you need protection, if I just had the discussion this morning with somebody. So if I have 200,000, I'm just making up numbers here and work it out to your size account. If I had $100,000 and we are at all-time highs and I am worried and I can't sleep, why don't I spend a couple $100 protecting myself? I don't protect myself all the time, but I should have balance. So yes, I'm with you that we are pretty high, and the propensity is that there's a lot of room to fall. And if I do believe in regressing to mean, this is a monthly chart, so every candle is 1 month. It's totally logical that we want to come back. So the question is, we have an expanding range, and you usually trade inside that expanding range. So the next swing low should fill the whole way down. So the target would be like 1900. There are so many lines to slice in between. So if that's the scenario in your head, let's play them one line at a time. And we'll reduce it to a weekly chart first to see. And this would be the range that we are talking about.
Right.
Yeah. So let's talk about 2,500 first. That should be a very solid 8 to 25. That should be a solid support. And that would be the lower end of the range that we're playing with now. So what happened in April, see, this is my problem with this expanding range. This is an aberration. We shut down the world completely, and this is what happened. And that was the first time we did it. So on 2 levels, usually when we've never seen something, we overdo it. The next time we see that something that we've never seen before, it's no longer a new thing. So the next impact is psychologically less of a debacle. So even if we shut down the world again, I doubt that we will do this, because this was an aberration. So think 21,000 was the low. That's the starter. And think that there's so many lines of defense in between. I'm looking at 25 just to slice a line through all of them. Why not 24? 24 should be concrete, in my opinion. You have one cluster here. These are weeks. This test and this floor. So I think this whole range is very supportive. So yeah, I see what you're saying, but I think it's easier to bust out than fall through. That's my opinion. So the battle should be between the two. Neither should happen. We shouldn't go to new all-time highs, and we shouldn't fall to the recent lows. That's a good question. Okay, so same would be said here probably. Yeah, so what the conversation would be, we have lower lows and higher highs. So expanding range like a megaphone, and they usually trade inside of it until they break through one side or the other. But I think that's more, I've seen it work out better. And like what I showed earlier, when it's like a megaphone, I don't know if it's called a megaphone, something like this and like this. Or if the megaphone was flat top. So yeah, then this would be doable. Or when they say buy the third touch, when the range is like this, and you have something that touches here, goes back up, touches here, goes back up, and then by the third touch, then you're going to catch this whole rally and maybe the breakout from here. But for it to, so what we're saying is that it's going to do the third touch, the dip to the third touch, or fourth touch in this case. So if you buy the third touch, you made so much money because you caught all of this. So let's see here, new one. In this case, when I say they, it's whoever. So they say buy the third touch. So this is 1, it goes back up, 2, goes back up, and then the crash, that was the third touch. That's the trade. So the question this morning is this a trade? Right here. Maybe, but to that I'm saying there are so many lines in between that would stop it. So this is solid floor number 1. This should be concrete. In my opinion. I don't think we can do this again now with these givens. So the dip would be an opportunity to catch another wave up. Based on how things are going on now, we can change our minds. We reserve the right to do so. Same concept on a lower time frame, same chart daily. This is the S&P. So we do have a nice little range here. Are we swinging inside the range until we break through from one end or the other? And what I'm saying that this ruins it for the bulls, because now the line is blurred. It used to be like one tick above this and they would have taken it. Now one tick above this, they'll take it, but they'll say we just failed right here. So now they have like a target versus open air. So it kind of ruins things. But one thing is not changed. The bulls are in charge. So if you want to talk technicals, and again, I learned this stuff on my own, so I could be breaking all kinds of technical rules. Like I look at this tick and what is this? So this would be a place I'd buy, 3,400. This would definitely be a place I'd buy, 3,200. So if you want to trade the range, this is your trade. Watch the ticks, and above here you chase it. But now you have this guy to worry about, whereas before there was nothing here. It was going straight up. Now there's something to shoot for. So the bears have something to shoot for. And if we fall to here, I would load up. If we fall to here, I'll try to load up with a tight stop. I think there are buyers here all over. If we fall to here, I would mortgage the dog, the cars, and the house, and load up. Okay, so this is the conversation. That's a good start. Let's delve into some tickers. I think a couple of them, SHAK came in, and Save SHAK. That's retail, kind of. Save, I forget what's it. Save airline, yeah. Never fly that airline, by the way. They charge you extra for air. Okay, so I have tickers to go over, and I'm trying to bunch them up to where they make sense. I'll start with the craziest ones. Palantir. This is a new issue. The way it is, I read about it. It's controversial. Some people are dead set on shorting it. Unfortunately, I missed the trade when it fell. I said it's probably a good idea to buy it, and I didn't buy it. So now up here, I can't buy it. There's no way. It takes a lot of money from government, like about $1 billion and change. I don't know how much of its total money tail is from government. It's probably too new to get information over here. PLTR. Yeah, I don't have anything on it here. So, yeah, buyer beware. If you own it, great, good job. Manage those winnings accordingly. So this is the Palantirs thing. Snow, I think I still have a small put short, which I paid pennies for, as a lottery ticket on its earnings. It was green at one point, but I didn't do anything with it. So this is another new issue in a different, this is where Palantir was. I didn't know much about it, so I said if anybody wanted to bet on a newcomer, this would be the time to do it. So price to sale is 125. I don't know how accurate this stuff is. So we don't have a lot of information. They're too new. So, but visually you can see it's at a bottom that it recently sprang from 1, 2, and it's trying the third time. If you were forcing me, do something with it like today, I would go long versus go short. How I would go long, I would eat $230. Oh my gosh. So I would do calls if it has calls. So, and in that case, I would make them long dated if I'm willing to bet on it long term. If I'm betting on it from a trade perspective, I wouldn't go probably past January. But if I think the world of it, I would buy right. Okay, so what do people do is there's a strategy called, if you want to own shares and you're not comfortable just owning calls, because calls have time on the clock and they will die if you don't get the timing right, even though you may get the decision right. So you buy shares and you write calls against them. So what does that mean? Quick lesson. If I buy the shares, let's say I bought 100 shares, I can sell one call every X period of time, month, week, whatever they have available, against my shares. So if I buy them at 235 and I'm willing to sell them at 265, I can go out to, say, February and sell the 265 calls if there's any premium there. I'm speaking in theory, so do your homework. And what happens then? I don't have any excess risk. What's going on is I'm putting my asset to work. So all I'm doing is I'm promising somebody I will sell them my shares at 265 if they want it. And they won't call me on it unless it goes above that by as much at least as they paid for it. Because if they paid $5 for it, they're not going to take them until it's over 270. Otherwise, they'd be at risk. Maybe they will, maybe they won't. But the point is, I don't have any risk. I keep my money that I collected from selling them that promise, and I profit up until here. And where do I start regretting is from here on up, because I have the shares to here. I have the $5 I collected from them from here to here. Over here is where I'm missing opportunity. I can live with that problem. Now, these are fictitious numbers I just said. So do your homework. If you have questions, let me know. But that's buy right. You buy the shares, you write calls. I don't do this with stuff I don't believe in, unless I'm an active trader. All right, those are two. So let's delve into Walmart. We have a few retailers. Walmart reports earnings. Let me see here. That's not it. Wally World, there we go. On Tuesday before the market opens. Let me see here. So I expect good things from Walmart. They're turning into Amazon. I've said it, where I was watching a commercial and it was like, wait, this is Walmart at the end. I thought it was Amazon all the way. They did it right. They saw Amazon, what they were doing years ago, and they said, we want to be Amazon. They're not cocky about it. So they completely flipped. They've always played with thin margins, so that was an advantage. So they knew how to battle Amazon that way. In fact, cheaper. But now they have the same model type of a deal. So, and they added Walmart Plus or whatever that program is. What if they come out and say, I don't know if they did it. Help me out. have they reported numbers on how many people are there? Because that's just money to the bottom line, the memberships. Because they have to compete on fast delivery, free delivery, and all of that like Amazon. And once that is established into their cost of goods, the memberships are just money flow to the bottom line, and any increase in membership would be an increase. Like I think Amazon has over 150, I'm estimating. It was 100 million last year. Members of Amazon Prime. What if Walmart comes out and says, we have 50 million, and they got there in 6 months? I'm just making up numbers. I don't know. I think that'll be a mega spike in Walmart like you've never seen. Well, like you've seen before. So I wouldn't short it. It looks toppy. It looks extended. If it dips, I will buy it. Where I would buy it, 145, 146. I do like this company, but going into earnings, you're flipping the coin. We don't know. We don't know. They might say something, oh, we're cautious. When, like a couple companies says, they beat both top line and bottom line by a lot. They raised by a lot, raised guidance going forward. And then the CEO comes out and opens his mouth and says, but we're worried about something. Well, if you're worried about something, don't raise your guidance. So, okay, thanks. Somebody's going to look for those numbers for Walmart Plus. So you can see at Walmart, I can see ledges if you wanted levels. So I'm going to give you actionable levels for me. Visually speaking, 142 is very interesting to me. 141 to 142, I would buy that dip. From a trading perspective, even from an investment perspective, 137.50 to 135, most definitely that would be a buying zone for me for an investment, meaning 6 months, 3 months, 6 months, a year. I think it'll be fine. If for whatever reason I get this here, it's a solid investment. For Walmart to be down here, down here, I'm recording outside of this, means the stock market has issues, not just Walmart, and I would sit in it because big stock market issues recover. So we'll see. That's Wally World. Target, do not short this bad boy. I saw a couple of social media pictures of empty shelves in Target this weekend. We have another run of hoarding. I don't understand. I don't understand. It just floors me. So what is this candle? Was that Pfizer? Yeah, it must have been. Oh, okay. So that makes sense. Yes. So here we go. Let me look up Walmart. Okay. So these are the stores that are virus stores. I bet you Costco has the same thing. Yep. So these are the quote winners from COVID. Let me zoom. Yeah. So see how winners from COVID fell on the Pfizer news? It's like the stupidest thing on the planet. All right, Mike, we'll get those stickers. So what happened to Target is the whole market rallied. It popped a little bit, and they said, wait, it's rallying on news that could hurt me. I don't think Target gets hurt if people go back to the streets because they won in the virus. They were winning before the virus. They will go back to winning after the virus or with the virus. So dips are to be bought. This particular spot, I can see 172 maybe by Wednesday or 156, in which case I would buy the dip. So put that in as a to-do for me. In fact, I'm going to say buy the dip. And 168, 172. But I don't know what's going to happen. So and up here we'll fade it. So this would be Target, Walmart, Target, Home Depot. So Home Depot also reports earnings with Walmart before the Tuesday open. And boy, I see a tightening. Where are my lines? Oh, there we go. That's interesting. Let me see. Forget it. We already did it. All right, so we have support, and it busted through one line of support clearly. I can take that out and put it up here and recycle, reuse. So I say it's resistance. So how good would it be if they can break through it on earnings? The target is up here. So it's in support. It lost one level of support, which was tentative. This is much better support. In fact, visually, I should put it here. This is a daily chart, so nothing fancy. And you can see it. This is exactly how it'll play out. If it falls into support, I'm not bailing out because I know that the next support level is 262. So if I don't own it, I can nibble here, add here. This is, I'll triple. Like if I nibbled, added, I'll add. But I don't usually like to add this close together. If it falls to here, it's so close to this one that personally it wouldn't shake me out. Depends on my perspective. And if it comes down to here, then I'll double. Then all I need is a small bump and I'm good. There are ways of doubling down without any money out of pocket using options. So look into those. It's too complicated to discuss right now. It's tricky, but it's doable. You double down with no money out of pocket to get out of trouble, not to ride it back up. Okay, so this would be Home Depot. I don't have a reason to short it. I think Lowe's also report. Yeah. Oh, okay. So Lowe's report the next day. So here's the thing. You can ping pong it against the other one. Let me see. Similar stocks. For some reason, Jim Cramer loves this stock more these days, even though it was the worst performer. So two candles are important to me. So 155 is very important. 153 to 155. If they lose it, they're going to come down. So I'm going to say the lows near my house closed, and at the end of its days, it was horrible. Do we want to give this guy the credit that he won't mess up? There's a chance. I shouldn't say good chance. I don't know much about it, that this could happen. And this area here is resistance. So now he's facing resistance, and he needs support to hold. So now the onus is on the bulls. Support must hold. And then versus resistance above. And the resistance is kind of a zone. So that's that guy. W. So W is one of those stocks that came out of the depth of hell, thanks to hell, COVID. So it has completely retraced the rally that started in July twice. Arguably, yeah, twice. It needs to hold, or 180 could be in play. I still see them. This was under $20 or $20 not too long ago. And here we go. Up what is this? 1,500%. Even now, it's still up 900%. So keep that in perspective. And I charted the upside potential and the downside risk. And the downside risk is almost played out perfectly. We saw it like from here. I said it could be falling to bump up and draw the right-hand shoulder, and if that breaks through, then to come down here. So that would be the scenario that may still be unfolding. So if I wrote it long from here to here, I would ping against this 225 low. That would be important. That means the last bounce I'll put, last bounce. Else finish the job. So that's my opinion on it. If I were to do something with it now as a bet into January, it would be to get it long. But I wouldn't double down. Like if I'm hurting and I still decided not to get out, this is not the time to add, because it's still a speculative play. It's still 900% above its low. So it's not an easy double down. All right, Macy's. I'm inclined to short this with puts. If they're cheap, I'm going to buy puts. I think the management is clueless, absolutely clueless. I don't know the people in charge right now. Maybe I do, maybe I don't. But I used to know the people that used to lead the company, like from the first day they started the Macy's.com website days. They took out the CFO to lead that group, and it's just a disaster, an absolute mess. And if you don't think it can go below $5, I think it can go back to $5 because they've done nothing new. Absolutely nothing new. They keep saying people every time it jumps, they chase the high percent of online sales. Oh, they're growing their online sales, but they're taking away from their own foot traffic, which is more profitable than their online sales currently, or it was last time I checked. So where is the good news in that? It's insane. People, smart people on Wall Street that are still falling for it. It's just unbelievable. This stock is going to go bye-byes if they don't change their ways. Okay, so this is quarterly sales. 5.7, 5.4, 8.5. Where did that come from? January. 3.1, 3.7. Did they have a sale of sorts? They must have had a sale, sold assets or something. I don't know. So it's not good. Let's look at a yearly basis. 25, 24, 25, 25, when everybody else is growing out of control. Fundamentals. Okay, there's a bug there. I've told them, reported it. They said, okay, we'll look into it. See, look, it comes up on this page, and here it doesn't like it. Maybe it's the financials from a quarterly basis that can do that. No. Yeah, there's nothing we can glean from. Anyway, I wouldn't bet up on Macy's. It's not GE. That's my opinion. GE is still cranking out the cash. They streamlined their businesses, and they deserve what they got. Okay, Shake Shack. So I'm going to speak to it from Chipotle. So I don't know what it is. Some restaurants know how to work comps, even in tough situations. So Shake Shack is fighting at 84 for a super, super hard line in the sand. Careful. This is the Pfizer pop, so it's not considered a COVID company. What does CMG do on the Pfizer pop? It's COVID. See, it fell. All right, which is strange. That is the dumbest thing ever. So if I were a guessing guy, I would guess 73 before 88. But those are the ranges. And this level up here is tough. If we go to a weekly, it'll probably show it. Ooh, okay. So this is a weekly chart to zoom out. It came out of the box crazy, and it topped out. It had one close above this line on a weekly basis and then crashed. Long time consolidation. So that's a very solid floor. In fact, I should make it so. And if it at all ever comes back down here, I would buy it blindly. It looked like it had a squeeze in here, and it popped from it. It fell, and then it popped. So both came true. Is this one of my lines? Yeah. So there's another line that should go left and right. So this line expands and is still meaningful. And there are other ones above. So if I were to put another line, somewhere around here, and then copy paste somewhere around here. So these are milestones. That's a weekly candle that's indecisive. They opened here, they loved it, they hated it, they said we don't know, let's just go back to where we came from and punt. So they're going to do something next week. So logically, you would look at this end, you would look at that end, and see what happens. And the trade is probably going to be in between those two lines, in between the bottom and the top. So that's what a doji looks like on a daily basis. They opened, they rallied, they hated, and then they came back to close about the same as the first day. So you get a doji on a weekly basis. Okay, that's Shake Shack, Target, Walmart, W. Now we get into the crazy NCLH. Cruise lines. Pfizer news, clearly good. They retraced it. It would make a better buy closer to 1750. wasn't there news of a sick person on a ship, like with actual COVID? So they used to have these headlines on any given day. Add to it that now there's a COVID. I've been cruising 2 times or 3 times in my life, and the last time was like a decade ago, more. And I'm done. I'm good. Actually, it was probably 15 years ago. And every time I've gone, you see the orange bags. Those are the biohazard bags. Oh, good. So this is a friend who is freaked out about COVID, yet he's delving into trading cruise lines. So that tells you that he's a pro. He's divesting his emotional state from his actual trading. So kudos. I don't know. If they're rallying, the whole market is rallying. Why on earth would I want to buy something that has extra risk? If it rallies to 27.50, which is the carrot, I would short it at 27.50. I would start shorting at 25 to 27.50 because it's just NCLH. First of all, do your homework on cruise lines and see who has the better financials. This is important right now. I mean, look at that. 1.6 billion, 1.9 billion, 1.4, 1.3, nothing. Like literally nothing. And they're probably burying themselves in debt. I don't know how up to date this balance sheet is. So they went from 5.7 in long-term debt to 10.5. That's not good. Look. So why? I mean, they would need a miracle to start selling the heck out of everything. People are changing their habits. People are buying designer masks and having holders and ways of washing them and cleaning them. So everybody's invested in this mask thing, which means mentally they're invested in this new world of virus. Nobody's going to be cruising except the hardcore cruisers. The people like me who tried it once or twice are gone, in my opinion. Anyway, RCL, another cruise line. Similar. This is a weird trade. We had Disney, I think, like this. Yeah. Oh, almost identical. Interesting. So I don't know what to do with this. It's like an island. There's a gap below and support and the world above. If it was me, I would say it's going to come down to 63 before it goes to 80 plus. But these are your trades. If it goes above 80, from a trading perspective, I would chase it. Otherwise, I would expect to dip into 65-ish, and it would be buy the dip opportunity for a trade. But I can't load up on it because I just don't know. His boss, he has a boss? I didn't know that. Okay. So we did RCL. So these are trades, or you own them for the super, super, super long term. So airlines are also trades. See, I would be willing to bet on airlines before cruises. That's my opinion. If you force me to do same chart. It's got a good base. It's been tested for months but they're still stuck at the bottom in March, which makes sense. Makes total sense. In fact, let me go see here. I'll do it later. The TSA numbers are increasing. Nobody's talking about it. I'm going to update my chart. This versus last year. Not the sheer numbers, because if you just look at sheer numbers, they're going to grow into seasons. Like everybody's going to be traveling not everybody, I am, for Thanksgiving. And so far, I've refused to let the virus change my life, like to where I'm not doing anything. I'm doing less locally. Like I'm not going to the gym every day anymore. But if I had vacation scheduled, I took it in July. If I go to see family in November in Texas, I'm going. So this stock has been mired, and the numbers, the TSA screenings locally, so in the US, is increasing, but it's also increasing relative to last year. So they were down 80% not too long ago. Now, last time I checked last week, they were only down 60%. That's huge. For a while it plateaued, and now it's back up. So we'll see. I'll update that chart. But the worst is behind them, and now they're all buried in debt. but they all have enough cash. They bleed millions a day. Collectively, it's probably hundreds of millions a day. I'm not sure. But there's a lot of pain. So I don't know who did this, but that was ridiculous. Almost said a bad word. Okay, so out of all of these, I like Love because they were bred on low margin, and I've written it up long several times. So Love into 40, I would go long. In fact, I will add the alert between those two. And if it ever breaks out of here, I'll say open air. I would fade it into 48-ish as a trade, but I wouldn't short it. Okay, we did Macy's, Teladoc. Okay, so now we're getting into stocks that are, we've done 3 stocks that are COVID stocks. So this is Teladoc. I haven't looked at it in a while. Let me see. Still a pivot for 3 months. It's still a pivot. R zone, they both worked out okay for us because we said they're resistance. In fact, I can extend it to here. It's still resistance. This one is slightly above it right there. Still a pivot. That's still correct. Now it's resistance. And they're testing this support zone. Best entry add zone would have been here. So if I was long Teladoc from here, this would, if I was looking at it, or if I got out here, this would be where I tried to get in again, because this yellow line is the volume profile. This has been the busiest buy sell spot. So both bulls and bears love it. So it should be a support zone. It extends down to here, which is the target of this Head and Shoulders, which didn't trigger right here, but who cares? My point, I always say, it's not the shape, the name, it's the fact that they're fighting over a neckline, and that neckline, the same neckline failed, and they're coming down. So if they come down to 150, I won't be freaking out, because that would be a buy zone. I'll add it right here. Okay, hide this. I know I'm sharing. Okay, so this would be it. So Teladoc is frothy, for sure. And they had issues during the pandemic because they got so busy that they couldn't keep up with demand, and people were waiting for hours and hours. So 16 times its sales, not crazy. It's not cheap, but it's not crazy. Look at their sales. 440, 475, 514, and then boom, COVID. 500, 1.3, and now less. I don't know what's the next one. So if the next one is even lower than this, when is it? Oh, they just reported? Okay. So be careful. I have surgeons in my family, and I asked them about the industry. They said, it's losing its luster because a lot of the healthcare companies have it. Like, mine has their own. I can video conference with somebody almost instantaneously. So, I don't know. It's like competing against Coca-Cola and then Coca-Cola finally copying what you have. It's hard. So this would be the trading perspective on Teladoc. Let's pull up a weekly chart on this one. So they did well. If they fade and start trading between 140 and 160, I would not be surprised. I don't expect it to go to 250 again. If that's your entry point, then you have to manage out of it somehow. Another one is Square, only this one has sustainable advantage. So you see this pattern we started the show. Where's my sidekick? We started this session with saying, okay, so the small caps were showing higher lows, and then they were battling a neckline of sort, and then boom. All right, so that's what happened. Here, boom. Here, boom. So the headline of Pfizer, caused pops like this in the small caps, but those pops were coming. You don't have this without resolution. When you have the range go from here to a point, either this or that has to happen, and it usually it's a breakout or a breakdown. I call it breakout because it's a breakout lower as well. So this one here was fantastic. Look, higher lows, and I ignored this whole thing because this is an important line, and look what happened. I drew it. It's not like I'm making it up backwards. This is the green line right there. I probably did it on video. I remember talking about this for Square. Look at last week's video or the week before that. I bet you this was when I mentioned it. So if it falls back to 170 or 160, I'd buy it for a trade, because that's the neckline from which it just broke out twice. Once failed miserably, once failed after a fantastic push through, and this third one went above this one. And if they come back to the floor, in fact, buy the dip, one of two. This way, I'll know there's another one below it. If I'm lucky and it comes down to here, if I didn't do it the first time, sometimes I pass on these. I'll say buy the dip. I'm sure I misspelled it. Anyway, dip the buy. So this would be my plan. If I'm long, I can stay long. But it's a wild stock. So why is everybody so happy about Square? Because it is it represents the future of transactions, and it's only 11 times sales. PE, everybody will squawk, oh my gosh, it's 266. Who cares? Amazon has been in the 3 digits for decades. People have been shorting it for decades based on that. How wrong are they? Because they're looking at the wrong metric. PE doesn't matter for a growth company. And let's see how much of a growth company this is. 600, a billion, 2 billion, 2 billion, 2.1 billion. What are you shorting? Oh, balance sheet. Never mind. 1.23423. It's even better. So it is a COVID benefit, but because the trend was going that way, we were all saying, oh, we want to be electronic. We want to be electronic. The excitement around Bitcoin because of the electronic transaction technology. So what happened is the pandemic hit, the shutdown happened. The shutdown is really what caused it, not the actual pandemic. People didn't go digital because of the virus. They went digital because they couldn't go anywhere. So they had to get digital to get their transactions done. And they're not going back to paper and walking into the store. A lot of people are going to pick it up going forward. So the online transactions are just going to explode. The trend got a pacemaker jolt. But it was there for a decade. Square. Zoom. Man. Okay, so that's my pet peeve company. Too expensive. They better deliver the growth, but not now. I mean, I said it's shortable up here, but I tried to short it down here way too soon. And then when I decided that it's shortable, I didn't short it again because I just, when a stock beats me, I walk away from it. I still cover it. I drew a box and I sliced it in the middle, and that's the line to trade. So it is super expensive still, I believe. 90 years of sales, maybe. Key data. 94 years of sales already still built into it. So people are expecting so much of it because it grew sales like 350% over last year's numbers. So what happens when they roll over this year's numbers? So if they can still maintain 100% growth, 50% growth, then I'll be impressed. Amazon does 35% year over year over year over year over year. These guys had 1 or 2. You need more than a year because then that's when you start rolling over last year. So in 6 months, they're going to have to roll over this result. Like what happened here? 350% growth or whatever it was. Okay, so what's going to happen next year over this period of time? If it is 350, I will give them giant kudos. I'll be shocked. Okay, so that's Zoom. Save. Did we do that airline already? We did airlines earlier. So same trade as the other ones. Let me see. AAL. So Save had a bigger pop on Friday for some reason. 9%. Not sure why. I would not chase it personally. I would chase the breakout from 23. I would say maybe a cup and handle. And maybe 28 target. But R 26. Big R. So what am I saying? That this could be a breakout zone here. That could bring 28, but it might do this. It's a little crazy wonky. Whoa. Maybe. And I'm going to have to scoot it forward a little bit. So this would be my guess. Or my trade if it happens. My guess is that this is a resistance zone and this won't happen for a while. So I don't want people to be happy with that. And then I will buy the dip, even though I don't like the airline. Buy the dip support. That'd be the trade on this guy. Baba, we're getting into the weeds. So, love the dip. This is a company I would load up big time. In fact, I may nibble long term on it for myself because it's a great company, but it's got a big enemy, and it's President Xi. It's he's Jack Ma, the founder and ex-CEO. I don't believe he's still the CEO. He's like Bill Gates. If Bill Gates said something bad, it's like the government punishing Microsoft for it. He does nothing on a day-to-day basis for Microsoft. So it's really strange that they're going after it. I mean, this is a successful Chinese company, but it is what it is, and they are battling it fiercely. So what I expect is rhetoric that affects it in the media, and the longer it stays down here, the more comfortable I will be to get long or stay long. So if I'm still long and I didn't get out, I would not get out. It depends on my trade. So I thought the dip would be bought, and it was, and then the headline for further actions from China was just, whoa. Yeah, I mean, they're like flagrantly going after them. So you remember the headlines that dropped all Chinese stocks, and we said, not Baba. This is the exact opposite. All Chinese stocks popped except for Baba because now it is the bad boy. So, but they still do the business. I mean, Jack Ma or not, they're still a successful company. GE. So we called it long from what? Under 6? And now everybody loves it. Somebody woke up 2 weeks ago, I forgot, Goldman Sachs, JP Morgan, somebody said, hey, GE could be a good company. And now it's 50% higher, and now everybody's chasing it. Last week, they were saved. They hit it high and then fell apart. And then somebody upgraded them on Friday or Thursday. So they were saved. So I would not start longs here. I would start longs after the breakout. If I'm long, I stay long. I got out of my longs because it was a trade. First, I was in the Ford before anybody looked at Ford. Ford broke out. I got out too early. I got out here somewhere. I can't remember. But it was a double or a triple. So I'm not crying over it. Rolled it into GE and I shared it. And I got out of GE as well. So I'm trying to find another great American company to bet on, because those were the bets on these. I want cheap disaster companies. Macy's is not one, although that would be kind of similar. This one is different. It's got four industries are in, and all of them are viable, like alternative energy and aerospace and something else. I can't remember now. Anyway, so renewable energies, I think it was called. But they're on cranking, whereas Macy's is still flailing. So I don't think it's the same scenario. If you find one, let me know. And that would be it. So NEO is the exact opposite of GE. Boy, holy mackerel. What? No. I shorted it on Friday, thanks Charles. And the idea said, somebody said, they're shorting NEO with a lottery ticket. I think it was a January or December put, $22 or $20 naked put. So I looked at it, it's like, that sounds like a good idea. And I just needed a nudge anyway. So I bought a put spread and I shared it on Friday, which was a $29.19. I think I chose a $10 wide put spread, which I paid, I can't remember now, 65 cents, something like that. Whatever it is, I have a $9 upside potential if it falls through. They report earnings. So I don't know what they're going to say that hasn't been imagined yet. They are growing. They're a legitimate you know, all these SPAC companies out there, EV company, electric vehicle companies, they're just pre-production, and so they don't have any sales. This one has sales. It is 43 times sales, so that used to be like 4, if I'm remembering correctly. So there was not a lot of hope, and that was just a couple of weeks ago. Not a lot of hope in the sales, in the stock price, but now it's extreme expectations. So, okay, so they're growing. They have 3 billion in. So here's my problem. Where is it? If you put it on a yearly basis, they're still losing like 10 billion, 11 billion dollars a year, and they're not burning their own cash. So Tesla burns its own cash. These guys don't. So that's they need several miracles. Yeah. So the question is, let's look at Tesla. So here, let me go NEO, Tesla. So let me zoom out. What's that green line? All right. So Tesla, they needed to hold this. They bounced. So they fell and bounced. I don't think they're going to fill it, and this would be a turning point. So 360, 340 is a buy the dip zone for Tesla with conviction. So I was not a fan of Tesla at all, and they flipped me because of the metrics they're now delivering. So they went from needing a handout to exist and to actually, where is it? Operating cash. No, wait. Hold on. Free cash flow 1.8 billion. Net, let's see here. Cash from operations is what I'm looking for. There we go. $4 billion of cash from operations. This was $2 billion not too long ago, and it was like zero and negative not too long ago before that. And they're spending a ton, and they have batteries, and they have roof tiles. So they are not NEO. I should say NEO are not them. So these guys are the real deal now versus the rest. Can you believe it? The wild child is now the real deal. And I would definitely buy the dip. If not here, I'll buy it here too. Actually, a little bit lower. Definitely. So wait, I'll show you what tick to look for. $329, $330, but you might miss it. So if you want to start looking, I'd leave it where I had it before. Oops, ZZ. Anyway, so Tesla, this is what it looks like. I like this candle right here, $395. No problem. That was a good opportune NEO. We did Tesla. I'll put it right next to it. What's PLZ? I don't know what PLZ. Somebody asked about it. What is that? Plaza Center? No, it can't be it. PLZ. I don't know what that is. You meant what? Oh, I see. Okay, somebody was asking for a ticker and they put 3 letters, PLZ, WSM. So they're saying, please, WSM. Okay, I get it. So what's WSM? Oh, Williams Sonoma. Okay, I get it. So this one, I don't get it. So don't use my logic on this one. Floor should be 82 to 85 as a buy the dip floor. I think they report earnings, no? Look for it. I thought I saw it. Anyway, maybe it's somebody else. But I don't know. To me, it looks like a head and shoulders waiting to fall. And if I wanted to draw it, it's probably somewhere here. Anyway, so it's not for me, but a dip into here is buyable. And the higher lows, lower highs, pretty tight. So something's got to give. These are daily charts, so I'm not going to get more scientific than that. And it's just showing you that the range is coming to a point. Something's got to happen here. Either pop or fall. So if I were to be fair and represent the upside opportunity, this looks like a failure point before. So we would look for it to revisit old highs. And if it does come out of here, it's open air. I can hear my son's alarm going off for the last half an hour. Why even set one? Okay, so this is a problem level 102 and change. This is WSM. So let me see. I got all the ones on my list. Oh, let's see. Mike had Ford. We already looked at, but we'll look at it again. So there were three tickers: Ford, FSLY, and iRobot. Let's look at Ford again. So now they're getting exciting. And the more exciting part is that Jim Cramer loves it again, and he's got the hots for the CEO. The guy loves cars. Like, okay. So now he says, buy, buy, buy. So off the lows, it's great buy. If you took my long, I would stay in it. Expect a lot of resistance around 9. So it all depends. Was this a trade? If I get out here, I can leave it run for $1 and then catch it on the rebound. Somewhere around 8.50, or if I don't want to do that, I can sell covered calls against it, but I don't think there's enough premium to do that. I hope that helps, Mike. So this is FSLY, one of those anointed stocks that was spit out as gross. They revised their sales 5%, I think, if not less. They hammered the stock down 30% the one day or 2 days. It's way lower now, and if anybody ever believed in this sector, they should buy the dip. And if I haven't left it, I wouldn't leave it. And it's fighting for a big level, 81.5, 75. The whole zone is resistive. It's like into 90, believe it or not. It's just a giant problem. Now, just like Intel, these gaps are super hard. Don't expect, oh, they're going to fill the gap. They could, but it's going to take a long time. Look how long it took Intel. And it's going to fail. In other words, this trigger right here is too easy as a setup on the first go-around. So they're going to have to slog it out in order to get back into. This fall was too extravagant, and it just cannot repair itself like a V without a V thing. I mean, I wouldn't short it down here, but it's definitely an opportunity. I think the spread I suggested is still alive. And yeah, in my hands, I wouldn't do anything with it. AYX, same one. So I will do that since they're both together. So AYX, same, like a week later or a day later, a couple of days, same thing. The earnings were okay. The CEO revised his words or something, and it just caused a big debacle in the earnings. So this is 1 day. Repeat. So the only problem is it's drawing a neckline that you don't want to come to fruition, is that yellow situation. So just like FSLY, these are cloud stocks. So eventually they should do well, but the problem is they didn't do well when the virus resurfaced, or at least fears about the virus. Either way, it's okay. So either way, they are not sells if the market is going to come back to fruition. I mean, come back to being not come back. It's still a bullish market. Every dip is in the hand of the bulls. They buy. It's crazy, but they are. On Friday, I watched CNBC. I watched 3 shows of CNBC on Friday. And let's see, first 10 minutes of 2 shows and first 15 minutes of the third one. So the one guy on, I forgot what it was, Fast Money. I forgot his name. And he doesn't come often, but I've seen him there twice. Every time they mention anything, it's negative. And I saw him like a month ago. He was negative. Oh, we're going to go do this. We're going to do that. No way. We're sellers of this and sellers of that. How do they make money? How in the world did they make money? It was like you hit play 2 weeks, 3 weeks ago, whenever I saw him last. You hit play now. I think his name is Harry, and it was a disaster each one. So now it's going to be right. Now it's going to be right. And then one day he gets it right. They'll get him a month later. Oh, he called the problem. Yes, 3 times wrong, 1 time's right. Not many people can be short this long with their bank account and still make money. So it's pretty crazy. Sentiment is a powerful thing. So don't fall. Let's see. Hold on. Mike had another one. iRobot. IRBT. Ooh. Okay. So from a level perspective, it's a nice swing opportunity with a tight stop. So if it loses the recent low, Mike, I'd be worried. I would say ruh-roh. Because it could do something like this, but I don't know fundamentally why it would, but it is a risk. So they do have one lifeline somewhere on here, but eventually they probably will do this, something like that. Versus here is resistance, zone. It's a zone, so not a hard line in the sand. Something like this. Definitely here. Fade. It's a battle zone. It should fade the first one before it recovers and gets back up there. So onus is on the bulls here to continue on, go through the slog, dip a little bit, come back up, and face this somewhere in January. And that would be my guess on this one. I don't know fundamentals. I mean, are they growing? I mean, I know it used to be an exciting company. I'm in the market for one, actually. I bought one off of Instagram. I take back all good I said about Instagram shopping. The last thing I bought was a fraud, complete fraud. So buyer beware. Like I ordered what was in the video, and they sent me a $7 part where it should have been like hundreds of dollars. But anyway, price to sales is very realistic, 1.6. PE is very realistic, so there's no hope baked into the chart, meaning it's a good thing. There's no unreasonable expectations, hopium, built into the chart. So why is this not showing quarterlies? Okay. Wow. But they seem like the third month is always. Let's see here. No, they go in spurts. Okay, so still decent. Okay, so I don't know what they have recently. I'm in the market and I found a new brand the other day. The one I have is called the Nido, and I got it years and years ago because the video was amazing, and it was a knock against iRobot. I don't know if they've changed their technology since then. The first iRobot I bought was it bounces against the walls blindly. It does cover the whole area, but first of all, there wasn't a vacuum. It was just a sweeper. And then I saw the second one, the Nido, which had a laser. It comes out, it scans the room, and it mows it. You know, it does the edges, and then it goes into the insides based on actual track. And it had a vacuum. So it did sweep, but it also had suction. I don't know now. So now I'm looking for one that mops too. Okay, so I think I covered all of them. I'm looking through the list. Pot stocks. Not for me. This, I shorted this company and made some money, believe it or not, but I wouldn't short it just because. And the CEO was on CNBC last week, and they love him. So not the time to get long. If you're long, kudos. I would definitely trim or lock and leave runners if you'd like. The whole industry is gone. It's too high. If I were to own a pot stock, it would be Canopy Growth because it's the one that's, quote, legitimate. And even that, look at the comps they're rolling over. And yes, the new president could be good, but if they don't win Georgia, expect a lot of red in this company or this industry because the runoffs end in January. So if if you want to do something, short them into January if the charts still look like this. In fact, I will do that. I wish it has trigger on time. I have to look into that. So I want to. I bet you I can put code in there. So if I were to short them, it'll be somewhere at the end of December if they're still high, because if they don't win, the Democrats don't win Georgia, nothing's going to get done. Whatever bill they pass here on a federal level, more states might get pot legalized, but not on a federal level. So they say that, you know, if New Jersey got it, then New York will. If this state got it, then this state will. So okay, one state to state then by default maybe become, but there's still, I think, some laws. If it's not federally legal, then you can't do X or Y with banking and buyouts and things like that. So deals will be tougher to make. Anyway, I don't know enough about it to short it just for the heck of it. These are not the same pot stocks they were in 2018. They are more legitimized, and let me see what kind of hope they have. So 23 years worth of sales in their stock price. I think ACB is only 3.5. APHA 4. So CGC is the most expensive. And here I am saying buy it, but I don't think these are proper. They're wonky. Let me see here. So 90. So there is growth in the top line. ACB, mind you, ACB was almost delisted. So the stock price you see now is from a reverse split. There's no growth in the top line. So what the heck are they chasing? Absolutely no growth. Here it's shrinking, basically. So I don't know what they're... I didn't look at CGC. Sorry about that. Oh, I did. I didn't remember. Okay, so CGC has a little bit of growth. But ACB, my point is, it was a dead company right here. It split 1 to... how many? 1 to 12. Reverse split. So divide the stock price now by 12. And that's how much it was back here. It almost got delisted. And then it made a new low. And now suddenly everybody loves it? Nah, don't bother with it. It's a good trading vehicle if you know your stuff, but you need to be like in the half-hour charts for that. And in that case, 750 to 8 is a sell short or fade, but that's not for me. This is definitely not for me. CGC is, I can trade it based on its chart very, very well. Potax, yeah, but you know, those are in the weeds. Put up this. Tilray, avoid. I mean, if you know your stuff, do that. Otherwise, it's just, there are easier stocks to trade than this. All right, I think I'm going to stop the record. So the general idea is, I forgot. Dang it, I should have done it first thing. So this is the NASDAQ. And the 1 carat for the NASDAQ, it's on the QQQ, I think is better. There we go. It's this blue opportunity up here. Try to ignore the lines. Right here. So don't short markets for the heck of it. Because I mentioned how long ago that we could get 4,000. And I said 3750 looks like the first eyeball target that's easy to attain. If we don't have a disaster this week, this could be this week. So don't short pops without reason. What's a reason? Technical reasons. Like you can short 3650 until it fails, and then you're out, and you flip long because it's going to 38. Just as an example. The NQ is where nobody's looking now. So this is the NASDAQ futures. Right in the middle of these two yellow lines. The Friday arrows did not come to fruition, so I'll just punt. Move them forward. If they break above the high that they recently had, they're going to get to the accident scene that they had closer to the 9th, and which is about here, and that's the Pfizer pop. And then the Pfizer pop and drop, I should say, for them. Book some profits along the way, but the target might be 12.4. So I would expect an attempt to rally back to 1% will bring them back to the accident scene, 1 to 2%, 1.5%, and from there another 1.5% available. So there is a 3%-ish upside opportunity from here, and that's the better opportunity in my opinion than to try to play high-flying stocks. I'd rather be in Apple, FANG, extended FANG, Amazon. Apple and Microsoft is in there too. So anyway, yeah, this would be it.